Hello, hi guys. Hello, hi everyone. Good to see you guys here. Okay, so before I start, if you guys can hear my voice, can you type one in the chat box just to make sure? Hello, hi, thank you today. Okay, all right. So we'll start our webinar very soon. At 8 p.m. sharp. Okay. So today's topic is going to be quite interesting. It's going to be we're going to talk about AI. Okay, so we'll wait for more people to come in first, then we'll start our webinar very soon. Hi, Rolin. Thank you for the one, number one. All right, so okay, so let me start do some introduction first. Okay, so today's webinar, the topic of today's webinar is finding gems in the AI universe. So we believe that in 2023 was the most topic that people are actually looking at is definitely AI, right? So today we have a very special guest. It's also an old friend of Investing Note as well. Then to talk about finding gems in the AI universe. So today's webinar is going to be 1 hour webinar, and we're going to talk about AI, and we're going to talk about discover global and regional AI innovators, and at last we also can talk about insights to the financial and the prospect and risk of some of these companies. Okay, so just a reminder, we have a Q&A session later too, so you can see the Q&A button down there. So if you have any questions, leave some question down, then our speaker will be address them at the end of the webinar. Okay, so before I invite Dan to come on as a speaker, so we do have a Telegram group, as you can see on the screen. Okay, so there's a QR code there. It's a stock market. It's called the stock market buddies, and we'll be sharing some of these Singapore stock market information and also some news from time to time. So Dan will be there as well. He's quite active in the group too. So if you guys are interested, scan on the QR code and join the group. Okay, so we'll see you over in the group as well. All right, so without further ado, I will welcome Dan to come and share for today's webinar. Yeah, Dan, over to you.
Hey, hi, Daniel. Thank you. Hello, everyone. Good evening. I hope everyone have their dinner ready. Okay. First of all, let me just share screen first. Okay, just give me a minute. Okay, first of all, I would like to thank the Investing Note Malaysia team for having me back again. This is probably my third or fourth webinar with the Investing Note Malaysia team this year. So I really hope you all find my webinar useful and helpful to you guys. Okay, so today we are going for this 1 hour webinar. It's called Finding Gems in the AI Universe. Okay. Okay, I don't want to waste too much time on myself, so I just do a very quick background on myself. So my name is Dan, D-A-N. Okay, presently I'm actually a trading rep, a remisier, or a stockbroker, as you all might know, with Phillip Capital in Singapore. Okay, I'm also a SGX Academy speaker, and I have been in this industry for about 22 years. Okay, because I joined Phillip Capital in 2001. So that will make me, this is actually my 22nd year here. Okay, so I mainly do traditional stockbroking, security advisory, meaning I provide advisory service to my client on securities, and I also do onboarding of managed account. So as you can see, right, I work very with retail investors. Okay, so I really hope that today's webinar is very relatable to you guys as retail investors. Okay, so I will not waste too much time on myself. You can find out more about me at my profile page in this Investing Note here, and my company profile page here. Okay, do check out my Facebook page as well, and if possible, please follow, like, and share. Okay, I post there regularly as well. Okay, general disclaimer. So for today, right, all the views and opinion being expressed is solely my own. It's not a representative of any financial institution or any organization. Okay. In this webinar, I'll be sharing some stocks as well, but do take note that all these stocks are all for educational and sharing purposes. It's not meant to do any stock recommendation. Okay. Lastly, in this webinar, there will be no marketing or promoting of any financial products or financial instruments. Okay, so this webinar is totally free. Okay. Okay, so today's topic is finding gems in the AI universe. Okay, but first of all, we must know what is AI. So AI, artificial intelligence. Okay, so if you go to Google, right, you go and type artificial intelligence. Okay, this is what you will see lah. Okay, the theory and development of computer system able to perform tasks normally requiring human intelligence, you know, kind of thing, blah, blah, blah. Okay. So this one is actually, to me, it sounds very cheap, lah. Okay. Very technical. Okay. So to put it in a very layman term, right? Actually, AI is simply the science to make machines think like human, to act like human. Okay. So AI, it actually can learn and process large amount of data in which that we human being cannot. I mean, you know, our brain is only so big. Even for a genius, right, there's only so much data that our brain can process at any point in time. Okay, but for AI, it's different. They can process a large amount of data, so much more than what a human brain can. Okay, and they are able to do things like they can recognize pattern, they can recognize our human behavior, and use that to make decision and judge like a human being. Okay. Okay, so some example of AI. I'm sure a lot of you guys out there have social media, okay, be it whether it's Facebook, Instagram, or even TikTok. Okay, let's take the example of Instagram. Okay, so how does AI work in Instagram? So if you notice, right, in Instagram, okay, the post you like and the account that you follow, right, okay, it could be related to a topic, like for example, to eat, you know, to makan. Okay, then you will find that after a while, right, all your posts in the newsfeed is all about eating. It's all about good place to eat, you know, kind of thing. Okay, so this is actually the AI at work. So they learn from your behavior to know what is your like, what is what type of account that you're following, and from there they'll give you recommendation. They'll post it into your post feed, you know, for you to get more information on your hobbies, your likes. Okay. AI is also available in, it's also used in e-commerce as well. Things like Shopee, like Instagram, you know. So AI actually help to personalize the customer shopping experience lah. Okay, so they help to they go through your browsing history, you know, the things you buy, they analyze and try to understand your preference, you know, the thing that you like to buy, your trend, your purchasing behavior. And from there, right, just like social media, they'll push out recommendation for you. Okay, like for example, if I'm looking for a dining table, okay, then after a while, you'll see that the recommendation will come out with a lot of dining table and maybe even dining chairs, or maybe, you know, some things on the dining table, you know, like a vase or something like that. So these are all AI at work. Okay, and AI is actually also at work in chatbots. Okay, in Malaysia, right, I'm not too sure whether chatbot is very popular there. But in Singapore, right, I can tell you chatbot is very, very popular now. So in the past, right, if I want to do some banking, okay, like for example, I want to waive my credit card annual fee. Okay, I have to call up the bank, okay, and wait for a while, you know, press 1, press 2, press 3 before I get to a person. Then I will request for a waiver. But now, right, the moment you call up, okay, they will give you a link. They will say, do you want to use our chatbot? If yes, please press 1. So you press 1, right, they'll give you an SMS with a link, and you click on the link, they'll actually bring you the chatbots. Okay, so chatbots, right, now the chatbots, right, they have already built a database of answers. Of course, it's answers to simple query lah. Okay, so that you don't have to go through the phone, and wait for 20 minutes, 30 minutes, sometimes as long as 45 minutes to reach a live person. Okay, so let's say, for example, if I want to do a credit card waiver, annual fee waiver, okay, so I can just go to the chatbot and type credit card waiver, okay, key in some personal data, and they will tell me whether my credit card is waived or not. Okay, if I want to say find out about certain promotion, I just type promotion in the chatbot, and all the answers will come out. Okay, so now chatbot, right, they have already been using AI already, and is already gaining traction in Singapore. Okay, as almost all the 3 banks in Singapore, they are using chatbots. Okay, not only banks in fact, our telecom company like Singtel, StarHub, they are all using chatbots. Okay, so these are just some example of AI. Okay, so what are some of the AI stocks that you can think of? Okay, offhand, right, I believe a lot of you will tell me NVIDIA. Okay, actually, you are right lah, because what happened is that NVIDIA has been the face of AI in the last 1 or 2 years. Okay, mainly because they have this first mover advantage. Okay, the reason why NVIDIA is leading the AI market, or rather leading the AI team, is because they have actually gone into R&D on the AI chip way before the AI wave come in. Okay, so they already have a first mover advantage. Okay, but having said that, right, it doesn't mean that all other chip makers are not doing their job. Okay, in fact, a company like Intel, AMD, IBM, just to name a few, right, they are also producing chip that can be used in AI application. It's just that the technology may not be as advanced as NVIDIA at this point in time. Okay, because maybe they move out late lah. When the AI wave come in, then they start to do R&D and things like that. Okay, so they are slightly late to the game than NVIDIA, but that doesn't mean that they are not inside the AI universe. Okay, so in the AI universe, right, mainly we can categorize it into 2. Okay, the upstream and the downstream. Okay, for the upstream, we are looking at the chip makers, which I have just mentioned. Okay, and on the downstream, right, we have these AI tools and these cloud storage and cloud computing companies. Okay, so while the chip maker is making the chip to put inside the AI tools, or as we know, the AI bots, okay, the AI bots and the cloud computing company actually provide services to the end user. So there's an upstream and the downstream. Okay, and in this downstream, right, in this AI bot, right, I think the most famous would be ChatGPT, okay, which is developed by OpenAI. Okay, OpenAI has many famous investors, okay, but one of them is actually Microsoft. Okay, so Microsoft is in the game as well. Okay, just to give you another few example, like for example, for Google, right, they have Google Bot, okay, BARD, okay, then they are AI bot. For Baidu, they have these Ernie bot, okay, ERNIE, Ernie. And for Alibaba, they have these 统一千文. Okay, I'm not too sure whether you all heard of it, but you all can go and Google it lah. TONGYI QIAN WEN. Okay, so these are the company and many more others that have that are already having these AI bots working already. Okay, so AI universe is very big. Okay, of course, just now I mentioned, right, AI, they need to process a large amount of data. Okay, so obviously they will need cloud computing and cloud storage. I mean, to process something, you need a cloud computing, right? You need to have a computing system in order to process the data. Okay, and you need a cloud storage to store the data. Okay, so that when you ask an AI bot, say for example, what is the best nasi lemak in KL? Okay, then they can within a few seconds give you the answer. Okay, and the answer, which is the data, is actually being stored somewhere. Okay, so the company that's doing all this storage, okay, doing all this processing, are also in the AI universe. Okay, these are just some of them: Amazon, Adobe, and many others. Okay, So these are the more famous names. But what about closer to home? Okay, okay. I'm not saying that the company that we just mentioned is no good. Okay, in fact, they are very good. Okay, if you are looking from the perspective of AI, right, those companies are probably nearer to the frontliner. Okay, is in the front line of the AI universe. However, we must note that today's topic is finding gems in the AI universe. Okay, gems meaning some of the stocks or some of the companies that have been flying under the radar. Okay, that is what we call gems lah. Okay, and why closer to home? Okay, I believe a lot of audience here are all retail investors. Some of you have already been investing in the US market. However, everyone is different. I believe there's also a lot of retail investors who have a full-time job. Okay, you have your work commitment. Okay, for those retail investors who have boyfriend, girlfriend, husband, and wife, or even partners, you need your couple time. Okay, for those retail investors who have family, you have family commitment. So you may not have the energy or the time to monitor the US market every night, especially now that daylight saving is coming. Okay, so in October, right, US market will be opening at 10:30 p.m. So imagine even if you were to monitor just the first half of the US market, you could go all the way to 1, 2 a.m. You know, and you need to wake up probably at 6 a.m., 7 a.m. to work the next day. Okay, so for these group of investors, okay, if US market is too taxing for you, perhaps you can look at something that's closer to home. In this case, Singapore lah. Okay, because I'm a broker in Singapore. Okay, so I know the Singapore market very well. Okay, but if you find a company in Malaysia that have a similar profile to what I'm going to share later, perhaps you can take a look at them mostly. Take a look at them as well. But in this webinar, I'll be mainly sharing on the Singapore market lah. Okay. Okay. So just now I mentioned, right, in the AI universe, we have the chip makers and we have the cloud computing. Okay. But do we have big chip makers of the size of not say NVIDIA, even of Intel, of AMD in Singapore? Okay, or probably in Malaysia, or even in South Asia? Okay, I don't think we have, right? I mean, the biggest chip maker that we have in Asia is probably in Taiwan, okay, TSMC. Okay, but in Singapore, right, we do have suppliers to all these chip makers, okay, which I'll come to that later. Okay, obviously, in this part of the world, we don't have a company of a big size in terms of cloud computing. Okay, but what we have in Singapore, or rather on the Singapore Stock Exchange, is we have data center REITs. Okay, we have data center REITs. So I will be covering mainly these two. Okay. Okay, supplier to chip makers. So in Singapore, right, there is actually quite a few company that is involved in the semiconductor industry as a whole. Okay, but more in terms of popularity, in terms of prominence, okay, usually we'll say there are 3 very popular chip plays in Singapore market, as in 3 semiconductor plays are PLAYS, okay, in Singapore Exchange. Okay, that is AEM, UMS, and Franken. Okay, for AEM, they supply to Intel. Okay, and for UMS, right, their major customer is Applied Material. And for Franken, their major customer is actually ASML. Okay, obviously, due to time constraint, right, I won't be able to go through all 3 companies. Okay, so today I'll be mainly touching on AEM. Okay, but that said, right, I'm not saying that UMS and Franken is not good. Okay, if you go and look at the chart of UMS and Franken, right, they are actually not too bad now. Okay, they are actually not too bad. But from a perspective of AI, right? Okay, from the perspective of an AI wave, I just want to zoom in on this AEM, and I will let you know later why. Okay, so what is AEM doing? So AEM is actually in the business of semiconductor testing and handling. Okay, so they design, engineer, and manufacture the test handlers for the chip makers. Okay, so what happened is that when the chip makers, right, in this case Intel, because Intel is their major customer, okay, when Intel manufacture a chip, okay, produce a chip, they need to test the chip. Okay, so they will send the chip to companies like AEM to have them tested, make sure they can work, okay, before they push it downstream. Okay, so that is what AEM is doing lah. Okay, so coming back to the question, why do I want to showcase, or why do I want to share AEM instead of UMS and Franken today, is because I believe that other than NVIDIA, right, the closest rival to NVIDIA could probably be Intel, okay? Or rather, Intel may be a closer rival to NVIDIA than ASML or even Applied Material, okay? So don't take my word for it. So this is the article that I just extract out just last week only, okay, 14th of September. So Intel is also a beneficiary of the AI wave, okay, as you can see here, okay. So for these analysts, right, so he was saying that actually Intel is already producing chips for AI application, okay. And if I'm not wrong, the chip's name is called Gaudi, okay, Gaudi, Gaudi. So if you go and Google Intel Gaudi versus NVIDIA, okay, you can see that actually Intel Gaudi is not too far off, okay, it's not too far off. Of course, it couldn't exceed NVIDIA at this point in time lah, that's for sure, because NVIDIA has been doing R&D for so many years already, okay. But according to the analysts, we could probably see a meaningful contribution to the revenue in 2024 for Intel, okay. So we are looking forward, okay, forward into next year. Okay, let's take a look at these AEM financials. Okay, first of all, I have to admit that these AEM financials are not exactly very pretty lah. Okay, it's actually quite, I mean, I won't say it's quite bad lah, but it's bad lah, it's bad, but it's not like it's in trouble, because they are still making profit. Okay, it's just that the profit dropped a lot lah. Okay, so according to the latest first half 2023 financials, right? Sorry. So according to the latest 1H23 financial statement, the revenue dropped as much as 50% due to the weak semiconductor industry. Okay, so this is actually what is happening now. Okay, so in this year, right from the start of 2023, not to mention it's only the first half, even until now, we are still seeing the problem. That is, in this semiconductor industry, we have a inventory glut. Okay, meaning there's a surplus of inventory. There are too many chips inventory in all these chip makers. So they lead to lower test equipment utilization for companies like AEM. Obviously, because you already have a lot of chip in your inventory, so naturally you'll produce less. And if you produce less, you test less. And if you test less, it will hit those downstream companies like AEM. Okay, and because of this, right, the earnings also dropped 76.2%, okay, mainly due to weaker margins and higher than expected expenses. Okay, they also actually reduced their revenue guidance by around 5% for the year 2023. Okay, I want to emphasize, okay, this revenue guidance is for 2023. Okay, I will come to that later why I want to emphasize on this point lah. Okay, so overall, the balance sheet is still healthy, okay, with a total asset of about close to 800 million as of 30th of June 2023. Okay, so now coming back to just now the financials, right? Maybe you'll ask me, hey, Dan, since AEM financial is no good, why are you sharing this with us? Okay, well, that is because as much as financial are very important, earnings are very important, okay, because they tell us what is the state of the company at this point in time, okay, what they have done in the past half a year in 1H, okay, but what I'm trying to do here is to look in the future, because the stock market is always forward looking. Okay, so earnings are just past performance. Okay, there are actually some case for optimism. Okay, for AEM. Okay, mainly there are three lah. I will come to that. Whether it's company specific or whether it's company specific. Okay, so in terms of company specific, right? Okay, so what happened was that back last year in 2022, early 2022, AEM actually has a confidential arbitration case against them. Okay, so it's confidential, so we don't have much information on it. But long story short, okay, 2 months ago on the 30th of July, they have already announced that this arbitration case will be settled. Okay, so they will be paying US 20 million to settle the case. Okay, without any finding of or admission to liability or breach of any regulation and things like that lah. Which means that in simple term, it means they are not guilty lah. Okay, they just want to settle the case. Okay, and this settlement is final already. Okay, so what as you can see, so what the CEO of AM said, we decided on the settlement so that we can firmly clarify our competitive position in the market and put this matter behind us so that it does not disrupt our operation, business strategy, and our product offerings. Okay, so in simple terms, what they are saying that, okay, we have finally come to a closure. Okay, this case is over already, because this case has been impacting on the AEM prices for the past 1.5 years. Because every time there is good news on Intel or even on the industry, right, people will start to think that, oh, they still have an arbitration case in hand. Okay, so they always have this concern, this worry. Okay, but now it's already settled, or rather it's going to be settled. The settlement is final already. Okay, so the negativity news is already being priced in. Okay, so you can see, right, when they announced this arbitration settlement case, right, the share price actually dropped very sharply. Of course lah, because US 20 million is not a small amount. I mean, yes, their balance sheet, they have more than, or rather they have a close to 800 million Sing dollar there, but still US $20 million is quite a big amount lah. Okay, so we see a sharp drop in the share price. However, okay, when the first half 1H23 result came out, just like I shared with you, right, the result was quite bad. Net profit dropped 76%, revenue dropped 50%. But what happened to the share price? They actually went up. Okay, meaning that the market has already priced in all the bad news. Okay, they have already priced in this arbitration case, and the reason why the semiconductor is very weak in the first half is already being priced in. Okay, why do I say the weak semiconductor in the first half? Because what happened is that if you go and Google semiconductor outlook in 2024, okay, a host of answers will come out. Okay, and most will tell us the same thing. That is, they are expecting a 2024 recovery in the semiconductor industry. Okay, so I pull out this article, okay, from SEMI, okay, just I think a month ago. Okay, so SEMI is actually it's actually an association okay, so it's an industrial association that represent the the tech side the electronic manufacturing and design supply chain. Okay, so they have more than 3,000 members and 1.3 million professionals worldwide. Okay, so it's actually a very big association. So based on these SEMI, right, they were saying that the semiconductor industry, okay, is still seeing a near-term headwinds. Okay, but they are on track for recovery in 2024. Okay, so what is the headwinds? The headwinds is what we have just talked about just now. Okay, that is the supply glut. Okay, so now there's a oversupply of chip. I won't say oversupply I would just say that there is a lot of chip in the inventory. Okay, so they need to clear the inventory before we can see the chip maker producing more chips now. Okay, so they need to clear the inventory. So the near-term headwinds is still here. Okay, even even until now, I would say. Okay, but according to them, right, all the market indicators are meaning the data that they collected, right? It points that the industry, the semiconductor industry, is poised for a recovery in 2024. Okay, so all segments are projected to log year-on-year increase in 2024, with electronic sales probably even surpassing its 2022 peak. Okay, so the outlook in a sector, from a sector perspective, not a company's perspective, from a sector perspective, the outlook of the semiconductors industry is actually quite good in 2024. And having said that, right, there's also one reason why we should be optimistic about AEM. So this is more company specific. Okay, it's a company specific news. So just now I mentioned, right, Intel is actually the major customer of AEM. Okay, so just last month, only 24th of August, Intel has already come out to say that they are going to build its largest 3D chip packaging facilities in Penang. Okay, in Penang, Malaysia. Okay, this is not only going to be the largest, but they are also going to be the most advanced 3D chip packaging. Okay, so this is something big. Okay, it will be, I think it will be completed in 2025, if not wrong. Okay, and so coincidentally, right, okay, actually AEM already have a manufacturing plant in Penang, and that was way back in January this year. Okay, so in Chinese, right, there's this term called 近水楼台先得月. Okay, loosely translated, it means that the one that is nearer will stand to benefit. Okay, so can you imagine that if Intel is to pack their chip in Penang, okay, their latest and most advanced chip in Penang, okay, they want to test the chip. Who would they look for? Obviously, AEM have a very high chance of killing the business because of the close proximity. Okay, and this is also one reason why I want to highlight AEM today Okay. Okay. Having said all this, right? Okay, we must understand one thing. Okay, the stock market is never a sure win. Okay, there's no guaranteed win in this world. Okay, for everything, right? What we can do, okay, I mean, we are only human beings. So what we can do is we can use whatever information that is available at this point in time to form an informed opinion, okay, or an informed decision. Okay, but we cannot predict the future. I mean, I don't have a crystal ball. Okay, so whether you invest in shares or you invest in whatever instrument, unit trust or whatever, okay, there's always a risk factor. Okay, so for all AEM, there is a few risk factor here. Okay, one of them being the Sino-China chip wars. Okay, so I believe most of you might have heard, I think about a year or two ago, US actually banned Huawei, okay, in US. Subsequently, US banned the sales of chips to China, okay. And in retaliation, right, China banned Micron's chips in some of their key infrastructures, okay. And most recently, just I think about 3 weeks or 2 weeks ago, China banned foreign device in their government agency. So you can see that there is a tick for tack chip wars going on. Okay, but the consolation is that this time around, the impact doesn't seem to be so big. Okay, if you all remember, right, when US banned Huawei about a year ago, the whole market dropped. Okay, the US market dropped, I mean, the chip maker dropped, kind of thing, everything dropped. Okay, but this time around, right, when China banned foreign device in government agency, well, yes, maybe Apple dropped for 2-3 days or 3-4 days. Okay, then news came out that, oh, there is a great demand in China for iPhone 15. Okay, so much so that Apple need to delay delivery to them. Okay, and since then Apple has been stabilizing already, no more dropping. So the impact this time around in terms of all these tick for tack, Sino-China geopolitical tension is, I would say, is not as big as before, based on what we are seeing now. Okay, but it's still a risk factor that we should be looking at. Okay, of course, we also have to be concerned about the headwinds in semiconductor outlook. Okay, like just now, as I have said earlier, there is currently a surplus of inventory for the chip makers. Okay, and news also just came out about 2 weeks ago that TSMC has asked their major supplier to delay deliveries because of demand concern. Okay, so as much as association like SEMI and other market watcher was saying that there is a recovery in 2024, okay, we still need to monitor the situation now and then. Okay, we still need to keep ourselves at the toe, keep ourselves standing on the toe. Okay, so we still need to look out for any headwinds in the semiconductor in the near term, see whether they will deteriorate or not. Okay, so that is one risk factor that we may want to take note of. Okay. Okay, another risk factor for AEM is actually single customer concentration. I have mentioned a few times, okay, Intel is the biggest customer for AEM. Okay, Intel contribute more than 60% of AEM's revenue. Okay, so Intel is basically like a big brother to AEM lah. Okay, so as much as I believe that Intel is one of the closest rival to NVIDIA, but I cannot predict the future, you see. What if there's a change in management? What if there's a change in company direction of Intel and end up Intel losing out in the AI chip war? Okay, then that will be bad for AEM lah. Okay, of course, that is a bit drastic lah, but I still have to highlight that will be a risk factor lah. In the case that in the scenario that Intel lose out on the AI chip race. Okay. Okay, so let's move on. Okay, so just now I was talking about supplier to chip makers, right? Now let's take a look at these data center risks. Okay, before I proceed, right, I need to clarify two things. Okay, first of all, okay, today's topic is finding gems in the AI universe. So I'm actually looking at data center risks through the lens of artificial intelligence. Okay, I'm not saying that data center risk is the best REIT. Okay, it is better than a retail REIT, better than a hospitality REIT, or better than an office, or better than a healthcare REIT. Okay, I'm not saying that. Okay, but I just want to highlight the data center risk because of its link to artificial intelligence. Okay. The second thing I want to highlight is that data center REITs, after all, is still a REITs. Okay, so REITs are currently experiencing a lot of headwinds. Okay, in fact, REITs has been dropping for almost 1 year already, and the drop is quite significant, mainly because of the high interest rate environment. Okay, let me explain why. Okay, so in brief, right, in a nutshell, right, REITs by regulation, they need to pay out 90% of their net profit to all unit holders. Okay, this is a must. Okay, so actually REITs are very poor. Okay, so the way they can only survive is that they borrow from the bank. Okay, so when interest rate goes up, right, it will eat into their operating costs. The loans, interest on the loans kind of thing. So the expenses, or rather the cost, will go up. And that's impacting on the REITs price. And this phenomenon, right, is also impacting on data center REITs as well. Okay, so this is one thing to take note on these data center REITs before I go into these the details of it lah. Okay, so these are the two things that you need to know. Okay, you may ask, why data center REITs? So in a nutshell, right, this article actually I just take out about 3 weeks ago. Yeah, about 3 weeks ago lah. Okay, so data center Singapore REITs has been under the spotlight as investors has been looking for ways to ride the AI wave. Okay, this is taken from Business Time. Okay, so according to the article, right, the release of ChatGPT last November. Please remember this date because you will see that this is the time where most of the AI wave start to gain traction now. Okay, so the release of ChatGPT has led to a surge in demand for data center as well as the REITs that invest in them. Okay, and according to some research, JLL research, okay, the rise of these AIs will bolster demand for data center worldwide. Okay, and is accordingly, right, these rapidly expanding data will be accelerating growth and drive investor interest in these data center risks, even though there are some headwinds at this point in time now. Okay, this is basically what the article means. Okay. Okay, so in Singapore, there are 4 REITs, okay, that have data center in their property under management. Of course, I won't be going through all 4 due to time constraint, okay, but because today our topic is on artificial intelligence, okay, so I just want to look at pure data center play, okay, pure data center REITs, okay, so that will cross out mp4 Industrial Trust and Ascendant REIT, okay, Capital and Ascendant REIT. I'm not saying that MIT, mp4 Industrial Trust, and these Ascendants are no good. Okay, it's just that in line with this topic, okay, solely on AI, okay, I just want to concentrate and stay within the concept of AI as much as possible. Okay, so in Singapore, right, we only have Keppel DC REIT, Keppel Data Center REIT, and DG Core REIT as the pure data center play in Singapore. Okay, however, it's good to note that for DG Core REITs, right, is actually a US REIT. Okay, US REIT has been performing very, very, very badly in Singapore. Okay, so much so that in 2023 year to date, right, the 3 worst performing REITs, right, are actually all US REITs. Okay, Manulife US REIT, Prime US REIT, Keppel Pacific Oak US REIT. Okay, they are 3 of the worst performing REITs on the stock exchange year to date. Okay, why? Because in US, right, the property valuation have been dropping, and I think even for Manulife US REIT, right, they are even at the risk of going underwater. Okay, so I feel that I don't want to touch into US REIT at this point in time lah. So that will cancel out this. Okay, so today I will just share a bit on this Keppel DC REIT. Okay, so what does Keppel DC REIT do? Okay, so Keppel DC REIT, right, they actually invest in properties that are primarily used for data center purposes. Okay, and they are listed on the exchange in 2014. So they are not a new REIT. Okay, they have been around for quite a number of years, 9 years to be exact. Okay, as the first pure data center REITs in Asia. Okay, now they are not the only pure data center REITs, but they are still one of the few pure data center REITs, you know, in this part of the world lah. Okay, and for REITs, right, they always have to have a sponsor. Okay, and their sponsor is actually Keppel Corp. Okay, for those of you who have attended my webinar with Investing Note Malaysia earlier part in the year, right, I've actually touched on Keppel Corp quite a few times, extensively in fact, and in detail. Okay, so if you want to rewatch it, you can actually find the video on Investing Note YouTube page. Okay, and search for it. Okay, so they are managed by a very strong sponsor in Keppel Corp. So in short, Keppel Corp is actually a very big conglomerate in Singapore. Okay, which have many business lah, telecommunication, property, risk management, and everything. Okay, and of course, Keppel DC REIT have the usual REIT characteristics. Okay, just for the benefit of those who are not very familiar with REITs, okay, 2 main characteristics of REITs is that, number 1, they need to pay out 90% of their net profit to all unit holders. Number 2, they are gearing, which is their debt ratio, their leverage ratio, cannot exceed 50%. Okay, so these are the 2 main characteristics of REITs, and these 2 also applies to Keppel DC REIT. Okay, and for Keppel DC REIT, right, they pay out distribution 2 times a year. So the estimate dividend yield is about 4.6% plus minus lah. Okay, so I have actually pulled out the distribution history for the past 3 years. So as you can see here, right, in 2020, they pay out 9.71 cent. Okay, in 2021, they pay out about 9.85 cent. Okay, and in 2022, they pay out about 10.21 cent. So you can see that their payout every year is pretty consistent, pandemic or no pandemic. Their payout has been very consistent, and that could act as a buffer against any near-term headwinds. It means that even if the counter is not performing, at least you stand to get a lot of you stand to get a decent or a better or a good yield on the investment. Okay, remembering that for REITs, right, they need to pay out 90% of their net profit to investors, okay, to their unit holder. Okay. Okay, now let's take a look at these Keppel DC REITs financials. Okay, they are much better than AEM. Okay, that's for sure. Okay, but of course, you know, they are not like making like 50%, 60% kind of thing lah, which is natural. Okay, because as I mentioned earlier, right, REITs are usually more stable. You don't see exponential growth or overnight. Okay, why? Because they are poor. What? They pay out 90% of their net profit to unit holder already. So where that money come from? If they want to acquire a new property, right? They want to expand, right? They need to either borrow from the bank, okay, or borrow from the market in the form of equity financing, meaning right issue or preferential offering. Okay, so their result, as you can see here, the revenue is up about slightly more than 3%. Net property income is also more than 3%. The DPU slightly increased by 0.003, so it's very minimal. Okay, but if you compare this to the risk in general, okay, the risk sector in general, this set of results is actually very resilient already. Okay, it's actually very resilient already. Okay, for REITs, right, one very important metric that we look at is actually portfolio occupancy. Why? Because as I mentioned earlier, so how does a REIT work is that they buy a property, okay, they rent out the property, they collect the rental, minus off all the expenses, and pay 90% of whatever is left to the unit holder. Okay, so a high portfolio occupancy means that the tenant is always there. Okay, especially at 98.5%. It means that it's almost close to full utilization of the space in the property already. Okay, and with that, right, they will collect the rental, more rental. So if you only have a portfolio occupancy of say 50% or 60% or 70%, it's not efficient because your property is so big, but you only rent out 70%. So a higher portfolio occupancy will always be more desired. And in this case, right, Keppel DC REITs, they have quite a high one, quite a high occupancy rate of 98.5%. Okay, with a long portfolio WALE of 8 years. Okay, what is WALE? WALE is weighted average lease expiry. Okay, it means that you know, right, when you rent to a tenant, right, you sign a lease. Okay, so on a weighted average basis, right, the lease expiry is about 8 years. 8 years is pretty long. Okay, why? Because you know, if you are renting an office space or whatever, right? If you're renting an office space, it's easy for the tenant to move office because they just need to move the employee over, maybe a few computers or some document over. Okay, but for data center is different. Data center consists of a lot of data, okay, a lot of data, a lot of servers. Okay, so it's not easy to just move the server. Okay, not only that because it's big and bulky, but also because servers take up a lot of electricity. So it's hard to find another place that is big and, you know, can provide, have a high power output to support the server. So I'm not saying that there isn't any, but it's not easy. That is why usually for data center, right, their lease expiry is slightly longer. Okay, so they have a low gearing of about 36.3%. Okay, just like I mentioned, right? Gearing ratio is actually their debt ratio, or rather their leverage ratio. Okay, maximum they can go to is 50%. So now they are at 36.3%, meaning there's a lot of headrooms for them to maneuver if they ever need cash. Okay, they can still borrow because there's still a 17.7% headroom for them to borrow. Okay, and out of these debt, right, these are 36.3%, or rather out of this debt, right, 73% of them are already rate hedge. Rate hedge meaning that they are already fixed on the interest rate through these what we call interest rate swap. Okay, so a high rate hedge, right, doesn't mean that they are not affected by the high interest environment. It simply means that the impact of these high interest rate on the risk itself is slightly lesser. Okay, why? Because they already fixed the rate. Like for example, this as I written here, the average cost of debt is about 3.1%. So outside maybe the rate is about 4 or 5%, but they already fixed the rate at 73% of the borrowing is already fixed at 3.1%. So no matter how the rate move, they will still be paying 3.1%. Okay, for a few years lah. Okay, so just now I mentioned, right, REITs survive on bank loans. Okay, for every bank loans, right, there is always an expiry, and when the bank loan expire, you need to refinance, and this is where the difficult things come in. So if you refinance when the interest rate is high, then your cost will go up. Okay, but good news for Keppel DC REIT is that they have already completed all the refinancing of all the debt that is due this year in 2023. Okay, with bulk of the debt that is due in 2026 and beyond. Okay, meaning to say that they will, not say they will only, they might run into trouble if we still see a very high interest rate environment in 2026 and beyond. Okay, because the bulk of the debt is going to be due in 2026, though they may need to refinance in like 2025 or 2026, closer to the date. Okay. Okay, case of optimism for Keppel DC REIT. Okay, I mentioned just now, okay, it's one of the very few pure data center play to ride on this AI wave. Okay, as I mentioned earlier, okay, AI is about, you know, processing and learning and processing the data so that they can help to answer the queries of the end user. Okay, and in order to process this data, right, this data have to be stored somewhere. Okay, they don't just plug from the sky, you know, it have to be stored somewhere. Okay, so data center REITs is one of the key beneficiary, okay, that has been flying under the radar in this AI universe. Okay, another case of optimism is that Keppel DC REIT is also well diversified geographically. It's not like, you know, they are only operating in Singapore. Okay, so I have a chart here with me taken out from their website, so you can see that other than Singapore, right, they also have data center in Australia, Malaysia, China, and many parts of Europe. Okay, and for this China, right, this Guangdong data center 3 is one property that they just recently purchased. Okay, healthy capital management. Okay, I mentioned just now, gearing ratio 36.3%. Okay, with 73% rate hedge. Okay, so they are likely to weather the high interest environment now. Okay, and okay, this just to sidetrack a bit lah. So yesterday, right, during the FOMC meeting, okay, they were saying that it will be longer for higher rates going forward. Okay, we might see one rate hike in November. Okay, and we might see fewer rate cuts in 2024. Okay, that's what Powell say. Okay, so yes, it's taken as negative. Okay, because there is fewer rate cut in 2024. But the keyword here is rate cut. Okay, although there are fewer rate cut, okay, it's still a rate cut. So what I'm trying to say is that going forward, right, we might be de-escalating from this high interest environment. Maybe slower, okay, but definitely we might be seeing a peak of these rates soon now. Okay, that's what I'm trying to say. Okay, so I can't put my head on it, but it's unlikely, okay, that the high interest rate will persist all the way to 2026. I'm not saying that it cannot be, but based on my personal opinion, I don't think it's likely. Okay, I don't think it's likely. Okay, another case for optimism is that Keppel DC REIT, they have a very strong sponsor. Okay, as I mentioned just now, okay, Keppel Corp is a very big conglomerate in Singapore. Okay, and they have this project called Vision 2030, which I have explained extensively in my webinar with Investing Note Malaysia in the earlier part of the year. Okay, as I said, you can go to the YouTube page. Yeah, to take a look, to watch it. Okay. Anyway, long story short, okay, the Vision 2030 emphasize on sustainability and recurring income. And Keppel DC REIT will be playing an important part, okay, in their march towards this Vision 2030. Okay, so the support is there, the potential is there, okay, the financial health is there. Okay, so this is definitely one stock that you may want to take note of. Okay, because they've been flying under the radar also. Okay, obviously, there's also risk factor. Okay, high interest rate environment. Yes, they can weather high interest rate environment, but as I mentioned earlier, if they are looking to grow, they want to acquire new property. Okay, the new property will be costly. That's for sure. Okay. Second risk factor, high utility cost. If you all have known, right, ever since the Ukraine war, right, energy price has been soaring. Okay, especially India. Okay, I don't know why India, but the energy price has been soaring. Okay, so data center, the server, they need a lot of electricity. Okay, and these high utility costs, right, will be adding operational costs to the REITs itself. So this is something that we want to think of. I mean, if energy cost is going to skyrocket by another 100 or 200%, obviously that will have an impact, an adverse impact on Keppel DC REITs. Okay, so the third risk factor is that just now I mentioned the Guangdong Data Center 3 is a recently acquired property. So there's actually a final payment upon the completion. Okay, it's expected to take place in this quarter or next quarter. So when that happens, right, just now I mentioned already, REITs are very poor because they already pay out 90% of their profit to shareholders. Okay, so what they can do is they go into the market and borrow. Okay, equity fund raising, which means that they issue right issue. So when they issue a right issue or preferential offering, that will dilute the share and cap the share price down. Okay, so that is something to take note also lah. Okay, and of course competition. Okay, yes, Keppel DC REIT is a pure data center REIT. It's one of the few in Asia. Okay, but there are already report that in Johor, okay, in the Iskandar region, okay, they are already, or rather the Malaysian government is already considering the construction of data center in the Iskandar region. Okay, so that might prove some competition for Keppel DC REIT in time to come. Of course, I don't know when, because this is just a possibility. I mean, if some very big company come and set up data center in JB, obviously the impact to Keppel DC REIT will be bigger. Okay, so it really depends on how fast that happens, or if it happens anything at all. Okay. Okay, so with that, right, I almost come to the end of my webinar, but I just have two key things that I want to share before I end my webinar. Okay, that is, there is no 包价 in this world. Okay, there's no sure win, there's no guaranteed win, there's no guaranteed in this world. Okay, I have to prefect that I am very bullish on the AI team. Okay, but that does not mean that the AI team will be here forever, or it will realize their potential in the next few years to come. Okay, we can never predict the future. I can give you a very good example. Just about 2 years ago, I think 2 or 3 years ago, there's a big hoo-ha about these metaverse. Okay, so much so that even Facebook changed their name to Meta platform. But what happened to metaverse? Okay, we hardly hear anything about metaverse now. Okay, and for that matter, right, we also hardly hear about NFTs. I mean, yeah, they are still around, but they are not as much talked about as they were lah. So at this current point in time, I feel that there are a very huge potential in AI. Okay, but we will never know what happened in the future. So this thing is something that we also need to be aware of. Okay. Okay. Last thing to take note is that the whole webinar today, okay, all the stocks that I share, all the information that I share is looking through the lens of AI, okay, of artificial intelligence. Okay. There are also other factors that might affect the stock that I mentioned. Okay, like for example, if there is let's say for example, wow, suddenly say, oh, they want to increase the rate for another, until 6%, 7%, 8%, 9%. Obviously, even though the AI team is very promising, that will impact on the capital DCB. These are some things that is not being covered in this webinar lah. Okay, so these are the things to think of. Okay, so with that, right, I've come to the end of my webinar. Okay, these are my contacts. So if you want to connect with me, okay, you can use your handphone now and scan the QR code on the bottom right hand corner to add my handphone to your handphone, or rather my handphone number to your phone. Okay, and with that, I think I come to the end of my webinar. And really, I want to thank all of you for sitting through this 1 hour with me. And I really appreciate it. Okay, thank you. Back to you, Daniel.
All right, thanks, Dan. Okay, so before we end our webinar, just let me do a quick screen sharing. Just a moment. Okay, so as you guys have heard from Dan, he's been sharing a lot of about Singapore market. So let's say if you guys are interested to invest in Singapore market, you guys can actually refer to these few brokers here. Okay, so these are the Malaysian brokers that have provide service in Singapore market. Definitely, I mean, Dan himself is also a reminder. So let's say if you guys are interested to invest in Singapore market, you can refer with Dan as well. He will definitely help you guys to provide this kind of service, right? Yeah. So then if you want, you can leave down your investing note or your contact in the chat box so that they can contact with you.
Sure. Just give me a minute.
Sure.
Thanks Daniel for the shout out.
Yeah, sure.
How do I?
There's a chat button.
Yeah, but I don't think I can type anything.
Uh,
Yeah, I don't think I can type. As a panelist, I don't think I can type anything. But no problem. So I tell you what. So everyone here, if you want to connect with me, just go to investing note. Okay. All my contact is all there. Okay.
Yes. Dan is very active in investing note too.
Yes, I post that almost every day. So it's in the Active Trader Club. Okay, it's free to join. Just join, or you can just look for me by typing my name, then _Cheng. Okay, and you will go to my profile.
Yeah. All right. Thanks, Dan. All right. So let's go to the next slides. Okay. So as mentioned, like at the beginning of the webinar, we do have one Telegram group which is called Stock Market Buddies. Dan is also inside. You can contact him in Telegram too if you guys want. And also, we are also the largest investor community in Singapore and also in Malaysia. So if you guys are interested in Singapore market, just join Investing Note as well. Just create an account. It's a free platform. There you can meet some of these Singapore retail investors and also professionals there as well. Okay. All right. With that, I think we have come to an end for our webinar tonight. So I'd like to thank Dan for sharing the interesting topic today, and also with our participants. Okay, so thank you for joining, everyone, and we'll see you on the next webinar. All right.
Thank you, everyone. Thank you.
Bye-bye.